FA1 Part C. Recording and Accounting for Credit Transactions. Chapter 12. Sales and Sales Returns Day Books. The topics that this presentation will cover are: 1. What is the Sales Day Book? 2. What is the Sales Returns Day Book? 3. Entering sales transactions in the day books. 4. Coding data. 5. Posting the day book's totals. 1. The Sales Day Book lists all the invoices raised by a business when they supply goods or services on credit. It also keeps a list of all invoices and credit notes sent out to customers. A business needs to make sure that it receives all the money due to it from all the sales which it makes. So it needs to record when and how much money is due, and the total sales. A Sales Day Book records and summarizes the contents of the source documents, which are invoices and credit notes. It is a book of prime entry, which is also known as a subsidiary journal. Stop the lecture. Answer the question on pages 251 to 253 of your interactive text study guide. 2. The Sales Returns Day Book is also a book of prime entry. It lists all the sales returns, which are goods that customers have returned. It records the value of goods returned, with the issue of credit notes. 3. How transactions are entered into the books all depends on the accounting system that is used by the business. In a manual system, the transactions are written in a physical book by hand, but in a computerized system, a keyboard and a VDU, a visual display unit, is used to input transactions into the system. Sales may be analyzed into different categories, according to the types of information that a business may need, and also according to its accounting system. A spreadsheet may be used to help produce an analyzed sales day book. For an example of how sales could be analyzed using a spreadsheet, see page 256 of your interactive text study guide. In a computerized system, sales transactions may be entered in, like shown below. Step 1. The sales invoices are typed out. Step 2. Then the details of the invoice are entered into the system, via a keyboard and VDU, visual display unit. Step 3. A report that can be generated from the system could be a listing of the invoices and credit notes of a particular day. Most businesses would like to avoid duplication of work, preparing invoices, then keying in the invoice details, so some accounting packages will produce invoices themselves. Step 1. Certain information needed for an invoice will be inputted, such as the date, the customer number, the product codes and the quantity. Step 2. The computer package will use the information and generate an invoice. Step 3. The computer package will also collect the information on the invoices and credit notes to create the sales day book. In some computer systems, the system for recording inventories of goods held is integrated or combined with the system for processing sales orders. To see the steps that would be followed in those systems, see page 257 of your interactive text study guide. 4. Codes identify items more concisely and precisely than written descriptions. They also help to classify items into groups for recording data. Coding saves time, because it is shorter than longhand descriptions. The account receivable ledger contains the individual accounts of each credit sale customer. Each customer needs to be allocated an account, and each account will have a unique code. As well as the customer account codes, these other codes are also used in the account receivable ledger. Sales invoice numbers. Product code numbers. Here are some examples of different types of codes that a business may use in their accounting system. In sequence codes, numbers are given to items in numerical sequence. There is no connection between the code and the item. It is suitable for document numbering. In block codes, there is a different sequence of digits for different groups of items. In significant digit codes, some digits within the code describes the item being coded. Hierarchical codes are allocated on the basis of a tree structure, where the interrelationship between items is very important. It is a type of faceted code, where each digit represents a classification, and each digit further to the right represents a smaller subset. In a faceted code, the digits are divided into a number of sections, and each digit in the code gives some information about the item that is coded. The general ledger consists of large number of accounts that need to be coded. A business will choose its own codes for its general ledger accounts. 5. The daybook totals are posted to the receivable control account, the sales tax, VAT, control account, and the sales account. The total of individual customers are posted to their sales, receivable, ledger, personal accounts, which are kept as memorandum accounts. In order for a business to track down all unpaid invoices, it needs to know who owes, what amount, when. So personal accounts are made in the receivables ledger. These are individual accounts for each customer. These accounts are memorandum accounts, which means that they do not form part of the double entry system. Before recording the double entry, the sales daybook needs to be totaled and ruled off. The cash account is for payments and receipts of cash. It is not used when a credit transaction first occurs, because there has not been any cash exchanged. Instead, the receivable account is used. When recording a credit sale, there will be an increase in assets, which is the receivables account, and an increase in income, which is sales. So the double entry of recording a credit sale will be as follows: debit, receivable control account; credit, sales account. When there is sales tax, VAT, involved in the sale, the double entry is as follows: debit, receivable control account; credit, sales account; credit, sales tax, VAT, because the VAT liability is increasing. When goods are being returned in the sales return day book, the double entry will be a mirror image of a sale in the sales day book, because the transaction, or part of it, is being reversed, so the double entry will be as follows: debit, sales tax, VAT; debit, sales account; credit, receivable control account. Stop the lecture. Answer the question on page 262 of your interactive text study guide. Cash sales are not recorded in the sales ledger, but the double entry would be as follows: debit, cash account; credit, sales tax account; credit, sales account. This is the end of Chapter 12. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part C, Chapter 12. It will be good practice, because the online questions are set out, like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What is the purpose of the sales day book? Question 2. What is the purpose of the sales returns day book? Question 3. Why do businesses maintain personal accounts in the receivables ledger? Question 4. What is another name for the receivables control account? Question 5. What is the function of this account? Question 6. A cash sale will be shown in the receivables ledger. True or false? After doing the quick quiz, do the online questions for Part C, Chapter 12. Do the questions, until you achieve 80%. Replay the lecture as needed.